Hey everyone, welcome to Market Insight for the week of February 5th through the 9th, 2024. So, monthly continues to make new highs. We're coming into a known resistance area, aren't we? We've been talking about this for a few weeks now. This supply line that has been framing the rally since the lows of October 2022. We construct first the demand line off of the two lows here, two swing lows, and then put a parallel on the intervening high. Very simple concept, but works extremely well, showing the stride and the angle of ascent and the pace of ascent. So last month we see a close off of the highs. And we're also at that round number of 5,000. It's usually a good spot, a big handle like this. It's a good spot for the market to target, then pause, maybe even react from there. So in any event, we're coming into an area where we expect supply to start showing up in here, right? Let's take a look at the weekly. And no supply yet on the weekly, right? We're making another new all-time high here this week, and that was 49.97 3/4 in the futures. Now, the weekly position in the overall weekly trend channel, which is basically the same as the monthly trend channel, it's overbought. So we would be anticipating a reaction of some degree in the next week or two. And I note the volume here increased this week as we made new highs. So buyers are still very present. And that's a constructive sign for the market, right? But their willingness to buy at new all-time highs, not quite as constructive, right? We know that this is when the market gets frothy at the highs, it's usually not a good sign. And why is that? Because the larger players who trade in larger size, they're trading in thousands of contracts, not just one or two. They're trading in huge size, and they need lots of activity to unload. They need activity to acquire on the lows, and they need activity to distribute on the highs. And so we might be seeing that here. But we haven't seen actual supply come in at this point. And until there's some subtle signs on the daily we're going to go through. But until we do see that obvious selling coming in, we have to say that buyers remain in control. Right? So let's turn to the daily and see what we've got there. So on Monday and Tuesday, that's these couple of days here, both days were pushing up or trying to push up. But Tuesday's narrow range day there, that narrow range day on Tuesday, on the low volume. So yeah, Tuesday's narrow range, clustered close, closing the same or just slightly underneath the close of the prior day, right? But for a whole day, we made no net new progress. So that narrow range, the clustered close, and then the light volume indicates the market was vulnerable to a pullback, right? And Wednesday we get that. We gap open to the downside, so we gap lower, and we trended down all day, closing on the lows on a large increase in volume. So this may be the first indication of supply showing up. Thursday turns right around and rallies back up on pretty good volume again. And Friday continues that rally to push higher, making new all-time highs, and again on sustained volume. So now there's some shortening of the thrust on Friday and effort versus result on Friday. We're not making as much progress up, right, as we could. In the price action and in the volume. And so potentially we're beginning to see some supply enter the market. And if this continues, then we're likely to see a pullback, likely back down into the 48.30, down into the 40.08 level, that old all-time high, right? These be good support, especially if it occurs in the next couple of weeks or so. Distance can come in anywhere between Friday's high at 49.97 3/4, and above Friday's high, look around the 50.30 to 35 area, and above that would be 50.75. So it might take a few days to get up there. If it does, we're in this supply area. So, and it can come in anywhere. It can start in on Monday, Tuesday, or it can go a little bit higher. Watch for Friday's high at 49.97 3/4, basically 5,000. Then around next level up on the supply line would be around 50.30, 50.35, and then 50.75 all the way up. So now, as a side note, let me talk a little bit about some behavioral characteristics of the market that tend to operate around the end of one month and the beginning of the next month. And that is that the pension funds and the IRAs and all of that, retirement kind of money, it actually comes in at the end of the month, the last couple of weeks, especially the last week of the month. And that money has to be placed by the fund managers, right? The folks who are managing the fund. And when the market's bullish, they don't want to be caught with a lot of cash on hand and the market's rallying, and they're not making, money. So they're going to place that money and they're going to buy stock. As I say, they don't want to be in cash as the market is rising. But after the last week or two of the pension funds and the IRA funds coming in, after that first week, after that, after the first day of the month, I'm not saying this very well, sorry. After the month turns, after the new month turns, that fund money starts to dry up. The pension funds and the IRA funds, they won't be sending money again until the end of the month, right? So the fund managers won't get another large slug of cash to invest until the last couple of weeks of the next month. So there's a natural flow here, right? A natural pullback, a natural characteristic of the market, where in the first couple of the weeks of the new month, we often see pullbacks because of this, behavioral characteristic of the market. So I raise this because we're in a known now, by the way, that doesn't mean that just, at the first of the month, we sell out everything and in the last week of the month, we buy everything. It's not that at all. These are tendencies. These are behavioral characteristics. But we want to look at the market context and structure and see what's been going on and, what's the background conditions. That's going to tell us more than behavioral characteristics. But when the behavioral characteristics come to play with market structure and market supply and demand characteristics, we want to be aware of that. So that's why I'm raising this. The general market behavior of funds drying up around the first week or two of the new month, and the structural characteristics, they're lining up for a pullback of some degree. And we'll see if that occurs. And if it does, we'll see if the downtrend start up on the hourly, right? We'll start to get down trending conditions on the lower time frame, which would be the hourly, and that's probably going to bleed over into the daily for a few days. And so that's how we would tell if this is starting to play or not. We don't just say it's going to happen. We want to see it happening real time, and the way we see it happening real time is the response off of the lower time frames. Okay. So let's take a look at the point and figure charts and see what we can see about that and where we are. We can highlight some of the structure here with that. So our point and figure projections. Now this is the typical intermediate level point and figure chart that I like to use. It's a 50 by 1 box point and figure, meaning that each box, each X and each 0 here represent 50 points in the market, and it takes 50 points. We need to push through that 50 points to go down lower, or push through to go above to create a new X or a new low. Okay, and this is based on the 60-minute high-low, right, and the cash index. We don't use the futures here because it's hard to, it's always a struggle to get the continuation charts to line up. And when we have a cash index like this, so much easier. Anyway, we could see our point and figure projections, nice accumulation area in here. In fact, this whole area in here is really good accumulation structure. But taking a conservative count from the first projections here, we get an initial run up. The maximum count was up to 5,100. We had smaller counts that we took initially to be conservative to 4,350. That breaks, and then 4,850, and that also breaks. And so now we're working off of the 5,100. We also have a confirming count, a count that occurs later on that is kind of stepping stone and confirms the initial count. And here we got a stepping stone confirmation count here along the, whatever line this was, the 4150 level. And there were 18 figures here, and that projects up to 5050. So that's right in the middle of our higher count off of this line, confirming the count here, right? We were able to do this as this started up. If you recall, we were confirming this level of up to around 5,000. We've been talking about this for weeks now, and this is where we get that, where that starts to line up. So we're in the target area of completing this initial count, and maybe the only count on this point and figure chart. And so we're in that target area. And so Bob Evans used to say, this isn't an area where we automatically take action, right? We're not robots, we're not autonomans here. But instead, it's an important area, as Bob Evans used to say, using a railroad crossing analogy, to stop, look, and listen. If you think about it, in the 1940s and 1950s and early 60s, the railroad crossings were a bit of a danger spot, right? We had to be careful when we crossed them back then. If you were alive back then, and you would stop, look, and listen both ways, right? So this is an important area for us. Doesn't mean that we take account, doesn't mean that we take action here, but that this is an important area that we want to pay extra special attention. So as we look here, as I said, we have really nice structure here. We could take a larger count, starting along the next higher last point of support. That would be in here. Let me get a pen and I'll show you what I mean. So we could start in here, and then that would go over to here like so, or maybe even we do this and that goes over to here, and we can go all the way over, in fact, into this area and pick up all of that. So this is quite a point and figure structure area, and that would lead up to, well, let me show you on a bigger point and figure chart. So let's go to a larger point and figure chart. So as I said earlier, that other one was a 1 by 50, right? Or a 50 point by 1 point and figure chart. That was the earlier one. This is also a 50 point. So each of these X's and zeros are 50 points, but it takes 3 boxes to reverse, or 150 points to reverse. Right? So this is just a larger time frame point and figure chart, useful for position trades and other kinds of, longer term swing trades, that kind of thing. So you can see we've got very nice structure in here, and this is conservative. I guess the most conservative would be right here. and that would lead to where we are now. And then the next level of next conservative count would be here, and that would give us 17 figures, but they're each worth now 150 points rather than 50. And so we can make the projection off of the low, and that brings us up to 6,000, right? So, and again, it's a pretty nice structure here as we look at this along this level here. It's a very nice structure in here. So we can see that we've got a well-formed accumulation on that higher time frame point and figure chart with projections up to 60.50. And I'm not saying that we're going to go to 60.50, but this is a pretty nice accumulation area. I get enamored with structure, I guess. So we'll see. I have to see how it unfolds. I mean, my bias would be that we would find a way to hold in here, maybe build another confirmation count for the next level up, but we'll see. Right now, the market's vulnerable to a pullback, and that may start on Monday or Tuesday, as I said, or we may go higher up towards 50.30 or even 50.75, and we have that count available in here, right, from the initial. So we can still get up there, but we're in the area of vulnerability, and we have a heads up, and our real heads up comes when the lower time frames turn and start trending in the opposite direction. Then we know we're in that pullback. So that's a little bit about the higher time frames and structure. So this week I've got the WiceWave webinar. This is a paid event. The members get a deeper discount than the public, of course. And I'm going to go through everything I know about the WiceWave, everything from its history to in fact, David's little plays in his currency charts. He used to keep a 500 tick chart of all the currencies, all the main currencies, you know, the British pound, the Aussie dollar, the Canadian dollar, so on. And he'd keep one chart there and he'd scroll through them looking for WiceWave setups and just make one or two plays pretty much every day on that. So I'll show you that as well. So it'll be a fun webinar if you want to come to it. And then we'll have deep practice on the next day, on Thursday, I don't know why that says the 8th. It should be the 8th at 8 o'clock normal time. So I'll see you on deep practice anyway. Enjoy the rest of the weekend. Have a great trading next week, and we'll see how this market, starts to respond to the point and figure, the overbought conditions that we're in. See if we don't start getting some sort of a pullback, or are we going to continue to go higher, fulfilling that 5,100 count? Maybe we're still bullish this week. We'll see. All right, everyone, have a great one, and I'll see you either on Wednesday or for sure on Thursday. Take care. Bye-bye.